There's your calculations. Okay, I want us to do a quick exercise on this, please. And I just want you to have your calculator with you. Just see what I'm busy doing and just calculate with me. Okay, in every row, there's two things given. The profit markup is exactly in the middle. The profit markup is exactly in the middle. And on the left-hand side, we've got the supplier. So that is what we bought the things for. And then we total received from our customers. So this is the selling part. We bought it for a certain amount VAT exclusive. Then you work out your profit markup. You add your profit markup. And then you've got your selling price VAT exclusive. Or if I gave you the amount that you pay to the supplier inclusive, you must take out the VAT so that you can have the VAT exclusive, because on the VAT exclusive, you can add a profit, and then you've got selling price VAT exclusive. And then from there, you can add your VAT so that you can make it inclusive. Can I quickly go back to the notes? I will come back just now. I just want to see to show you what is input and output VAT. The effect of VAT on the business enterprise. It is important to realize that in many of its transactions, the business is actually the customer. A business can therefore be both a payer of VAT and a charger of VAT. The terms input and output VAT are used to distinguish between these two types of VAT. Input VAT. What is input VAT? Input VAT is when we bought things and then we pay input VAT. Okay, let me show you this. We bought something from our supplier. And we pay, for example, 114 Rand for this, VAT inclusive. We bought from our supplier and we pay VAT inclusive. Then we say times 14 over 114, which gives us VAT of 14 Rand. And a cost price of 100 Rand. Can you see that? VAT inclusive, that gives us a VAT amount of 14 and a normal amount of 100 Rand. Then we add a 20 Rand profit. So our sales is 120 Rand. VAT exclusive, and then you take the 120 Rand and you times it by 14 over 100 times 14 over 100, and that gives you 16 Rand 80 cents. 16 Rand 80 cents. And we sold it for, plus the 120 Rand, we sold it for 136 Rand 80 cents. 136 Rand 80 cents. Okay, whenever you bought this 14 Rand VAT, the 14 Rand VAT that we've got here, this VAT is your input VAT. This is your input VAT. Because you bought, the goods come in, so this is your input VAT. That you're going to pay to your supplier, and your supplier must pay it over to source. This is your output VAT. Why is that output VAT? Because when the goods go out, we talk about output VAT. So by the end of the day, what are we going to pay over to source? Output tax minus input tax. And in this case, it's 16 Rand 80 minus 12 Rand, and that gives us 4 Rand 80. We can pay over to source. Okay, listen. If you bought something and you pay that 14 Rand VAT, you pay input tax on something that you bought. Then you add your profit and you sold it, and that 16 Rand 18 is you receive output tax on your sales because the goods go out. That's output tax. And then payable to source is output minus input. Output, what is payable to source? It's output minus input. Output minus input. That gives you 16 Rand 80 that you receive. 14 Rand you already gave to your supplier, and that gives you 4 Rand 80, which is payable to source at the moment. Input paid by a registered VAT vendor when they acquire goods or services from another registered VAT vendor. So when the goods come in, it is input VAT. That is when you bought from a creditor, and then VAT output is whenever we sold. VAT charged by a registered VAT vendor when it sells goods or rendered services to its customers. When the goods come in, goods and services comes in. Goods and services comes in, that is input VAT, and then goods and services goes out. Then we talk about output tax. VAT control is a summary of VAT input and VAT output and shows whether the business owes source or whether the source owes the business money. There's a nice example there. Let's quickly open two columns. I'm going to open two columns. Output tax, input tax, example, the following transactions relate to XYZ Run and Go, registered VAT vendor. Bought stationery, 456 VAT inclusive. Bought stationery, 456 VAT inclusive. The first thing that you must decide is this input or output tax. This is input tax because we bought. The amount was 456 VAT inclusive. 456 times 14 of the 140. 456 times 14 over the 114, and that gives you 56 Rand. 56 Rand input tax. Sold running shoes. Sold means it's output. Sold running shoes for 570, VAT inclusive. VAT inclusive 14 of the 114, 570 times 14 of the 114, and that gives you 70 Rand. Output tax because we sold. Bought trading stock for 900 Rand. Number 3 is where we bought trading stock for 900 Rand, VAT exclusive. So because we bought its input tax, we take the 900 and we times it by 14%. 900 times 14%, that gives you 126 Rand. 126 Rand. Number 4, sold equipment. Sold equipment for 2,000 Rand, VAT exclusive. 2,000 times 14 over 100. VAT exclusive, 14 times 14 over 100, that gives you 280 Rand. Because we sold, it's output tax. Because it's VAT exclusive, we put it on 14 over 100. Paid the telephone bill. Paid the telephone bill. What is telephone bill? Is it input or output? We receive the service, so it's input. 855 times 14 over the 114. 855 times 14 over the 114. That gives you 105. And the last one is paid salaries and wages. Salaries and wages are exempt items. So there's nothing there. Okay, what is the amount payable to source? What is the amount payable to source? You take your output is 70 Rand plus 280. That gives you 350. That one is 56 plus 126 plus 105. That gives you 287. And what is payable to source? Output minus input. That gives you 350 minus 287. 350 minus 287. In this case, in this whole activity, because of the input and the output columns, when we bought its input, this was VAT inclusive, that's why we do that calculation. When we sold its VAT output, the same it was in that it was also included. There we bought and that 900 Rand was excluded, that's why you put 14 over 100. There we sold, this one was also excluded of VAT, this one was included of VAT. We bought something, the telephone bill come in, we pay for the telephone bill, and then salaries and wages, no VAT on that one. So we owe source, and you must please indicate payable to source 63 Rand. 63 Rand.